Earnings season kicks off, and Wall Street traders are left not very enthused about it because we actually saw stocks drop, which has actually been par for the course in 2024. But our guest today, he caught it right last year. Zero from the point to point, telling us what the markets were going to do. What's he going to say now that we have actually missed the Santa Claus rally? Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny, and I'm guessing still cool, Scottsdale, Arizona.
Still cold. Look at this. I got a freaking vest on. But you know what? The heat got fixed last night at about 8 o'clock, so
Finally.
I won't be as bitchy as I was the rest of the week.
Well, that's great. It should make for a great show. Well, joining us today, who's coming back to the To Buy, Hold, Sell, is Jeffrey Hirsch. He is the editor-in-chief of the Stock Traders Almanac. Jeff, welcome to the program.
Hey, guys. Happy New Year, man. How you doing?
Happy New Year to you as well.
When you're a professional announcer, you say, welcome back to Buy, Sell, Hold, okay?
Welcome back. Welcome back.
Okay,
Dude,
now we're
I'm
talking.
such a regular. There's no welcome back.
I know.
I'm not a special guest star anymore. I'm just I'm part of the cast.
That's right. That's right. Definitely. You're a Buy, Hold, Sell contributor. So yes, we do. Yes, we'll put the press release out about it as well. But Jeff, I do want to start with you because last year we had you on the beginning of January. You were very thoughtful about explaining what the Santa Claus rally is. And here we had everything that we saw in the markets, wire to wire. You did great. You called everything, even the sell-off in August and September. What's in store for 2024?
What about 22?
22? Oh yeah, you were great then
too.
too. But that's ancient history now for Wall Streeters.
Sorry.
We want to know what is going to happen this year.
Well, we're set up for, positive action, not quite as bullish as last year. You see election years strong in general, stronger when we have a sitting president running, despite the polls. That's just the fact that there's the potential for a continuation of similar policies. But Santa Claus has failed to call, and the first 5 days are down. So that's 2 strikes of our January indicator trifecta. The full month barometer kind of holds the key at this point. If that's up, that'll, give us some more encouragement. But these are not binary indicators. It's not like a technical indicator where you're looking for a trigger to buy or sell based upon something specific. This is a warning. Start doing, more homework. Look at your other research, your other analysis. So we're a little concerned, but we're still bullish for 2024. We're looking for an 8 to 15% gain on average, our base case scenario. But this weakness in January is quite common in election years. We've seen January also subject to a lot of profit taking the last couple of decades or so since 2000. One of the reasons we created the January indicator trifecta was because the barometer was getting impacted by all this selling and profit taking in January. So we combined the 3 of them, the Santa Claus rally, the first 5 days, and the January barometer. We also see the election year pattern where there's some weakness in the first part of the year as the campaigning heats up and the mud gets slung. We're seeing that already. We're hot mics with people dropping out, and the caucus is in Iowa's happening in next week, right? Like 3 or 4 days.
Yeah, it's next week.
It's happening Monday, as a matter of fact.
Is it Monday?
Yeah. It's Monday. Monday. It's 7 o'clock. 7 o'clock in Iowa. The caucus starts. They are anticipating a gigantic apocalyptic snowstorm.
Oh,
so it'll be interesting to see.
But like the rain we had last weekend in New York.
Okay, yeah, Iowans are hardy people, so I think they'll still turn out.
I'm not worried about it. So
it is we're the only democracy in the world that still has these caucuses, and I sort of love the concept of you getting the neighbors together and you're voting and then somebody's saying, "Weren't you dating my daughter last week? Listen, you blah blah blah." I saw a video of like a hidden camera in the caucus last year. It was
like one of those daytime talk shows where people yell at each other.
Yeah, I mean, it was. Aren't we here to elect a presidential candidate? No, you know what? Your dog came over and ate one of my pigs. It was hilarious.
Well, you have that, and then after that is obviously New Hampshire. So that's going to really tell the tale, especially if you have a couple of candidates on the GOP side drop out after the results of the caucus. But with that, though, I remember what you said before, is that with the incumbent, as long as the incumbent runs, doesn't matter if they win or lose, as long as they run, historically speaking, you would see the markets rise on average 8%. We had Sam Stonewall.
No. When there's
No.
a sitting president running, it's more than that. It's 12.8% on average for the S&P with the sitting
Even
president
better.
running.
I
The
listen to
average
you,
of
Jeff.
8 is
I
about the
listen to
election
you.
year average.
Okay.
Sorry? Yeah.
What's
So the
that,
other
Toby?
thing, I want to just remind everybody about here is, the reason why January election years and the beginning of election years is kind of weak is because what happens prior is, remember we talked about that sweet spot of the 4-year cycle, the pre-election year,
Yeah.
that big rally, the Q4 rally in pre-election year is super strong. And as I pointed out, that move from the midterm low to the pre-election year high is about 48% in Dow, 60% in NASDAQ. And then what I've shown is that you see a good cluster of those annual highs, not all-time highs per se, in the pre-election year happen in December, and a lot of them at or very near the last trading day of the year, which did happen last year. So therefore, you would, not be shocked that there might be some consolidation or selling or profit taking in the new year after such a great run. So that kind of, leads to this early election year weakness, which we're seeing. So, but fundamentally, not much has changed. Economy's about the same. Inflation's cooling, but not super cool,
Right. Now I get that. I see what you're saying. I mean, Toby, you got some interesting thoughts on this. I mean, with the current market action, it's been slightly flatlined. I mean, what do you think?
Well, I think what's interesting now is, again, I'm just going back to like being a money manager in a mutual fund where you have to put money out. You can't, be in cash, right? The safe trade, Microsoft, NVIDIA, AMD,
Right.
SMCI. I mean, of our basket of AI picks and shovels, 8 of the 12 are the top performing stocks so far this year.
Did you just put SMCI in the same group as those stocks?
Yeah, I do, because you introduced it to me years ago. Of course, I claim that I found it, so screw you, Hirsch. But
brilliant minds.
Minds. But anyway, it is, in other words, you're sitting there, you got a whole bunch of cash that came in for the beginning of the year, you had all these people sitting on cash. And I just don't want to rush into tier 2 tech stocks. I don't want to rush into more economically sensitive. But when you get the surveys week after week on AI spending in general, I mean, it is a massive transformational change. That's why I call my company Transformative Research, by the way. And the whole spin here now is like the CEOs are talking to each other, going, "What are you doing, Bob? What are you doing, Charlie? What are you guys doing?" And at least in my world, in our tech alliance, our guys are working their tails off. They're spending their tails off, and they can't. For instance, on SMCI, they're backed up now. Almost 3.5, 4 weeks to deliver their supercomputer. Just by the way, Jeff, I was going out to a client of mine in San Jose a couple of weeks ago, and I fly into San Jose Airport. We drive to Fremont. Every building there is SMCI on the side of the freeway. I mean, every building. They have gotten so big, but who knew that they would be the largest NVIDIA chip buyer, and who knew they were going to be the largest, computer stack builder for AI, and and then
AI is the real deal now. It seems to be that type of technology that changes the world. Like, part of the super boom equation that we've discussed. Remember that 38-8-20 forecast? There's that culturally enabling paradigm shifting technology, like the microprocessor before it, and indoor plumbing and stuff like that changes individuals' lives everywhere and the world's, the planet's life collectively. So I think, it's amazing.
Well, I mean, but the point is, there's an arms race between the larger companies, right down and if you're a small company and nimble and you're really tech focused, you can absolutely kick some butt here, because the simple stuff, you just lose about 15% of your staff simply because you don't have to say, "Hey, Jeff, would you go look up what was the interest rate in February of 1994? Okay, boss, I'll get it for you half an hour later. Now you speak it into your computer and you get the answer in 3 seconds. If you want a deeper answer, you can, prompt it in a way that says, give me all the color, et cetera, et cetera. For me, it probably saves me 15 hours a week. And I'm not copying any copy from Mr. Hirsch. I just want you to know that.
Oh, it's all built into the AI.
Yeah.
Very nice. Hey, Jeff, before we go to the break, last year, you were very good about really strategizing using that almanac. You were telling us when we were going to see like the bigger parts of the market growth, which obviously happened in the fourth quarter. And you also really predicted, like I said before, the August and September sell-off. What are you seeing this year as far as a blueprint goes? And what's the almanac telling us?
The almanac is telling us that, slight weakness in the first quarter through March. It sees that election year kind of weaker seasonally, not down, just kind of flat. And then, we wait till we get through the conventions in the summer. Again, Q2, Q3 could be some negative periods, but the last 7 months of election years are always up. And, even if we get this sitting president doesn't win, which whatever you think, there is something I call this ding dong, the witch is dead effect. So when you have an unpopular president that's ousted, the market rallies after it's been down and that individual loses. So it begins to materialize as we see what some of the market action is here. I'm really keen on what we get out of January. The January barometer is going to be instructive, but right now it's a very typical seasonal year. Up, slightly into the March, April period, and then flat through Q2, Q3, and then up again fourth quarter. Typical seasonal action. Not nowhere near as powerful as the pre-election years last year, which just came true to form.
Well, you're so the almanac, now that I've grown to understand it and read it, are you going to start to divide a little bit into sectors? Are there also seasonal sectors?
Sure. We do that. We've been doing that for a long time. There's a whole page on there where all of the sector seasonalities are there. So right now, we got into energy, like the XLE, the energy stocks and copper in December. Several sectors went, green, and in the October period, there's a whole basket of those that are out there. A lot of stuff's on hold right now. Natural gas took a tick up earlier than seasonally, the way it's seasonally drawn up, but that low usually comes around February. There's this December to February period for oil, notwithstanding the macro events that are going on in the world. There's a little heat across the other side of the world right now. I'm sure you guys are familiar with the news from yesterday. Doesn't seem to be having a huge impact yet, but there's a lot of sectors in play right now. Tech, small caps. I wanted to ask you guys about small caps. That seasonal effect, the January effect, which is sort of like the December to February effect, came early as well. We got into the IWMs back in October with our MACD best months buy signal, but I'm sensing that the small cap effect is waning. A little bit in general, and also this year, I think we might have seen the bulk of the run in small caps. It just technically feels like it's stopped going up and starting to turn over here.
Well, remember that the IWM and the small caps are weighted a lot towards financials. So when interest rates started coming down, they got a nice boost because they always get a nice boost if their cost of funds goes down. Then they've sort of flatlined, and then there's problems out there in the insurance land, and there's problems with claims. It's funny. I love watching sports where you get the ads for all the insurance companies, all the silly ads. Well, go look at your auto insurance bill. Ours is up 14.5%, 15%, and nothing. Haven't had an accident, haven't had a red light, haven't had anything. You look at homeowners down in Florida, my lord, in California, I have friends in San Bernardino that can't. It's not like Florida where if you have $1 million house, you're paying $70,000 a year in mortgage insurance if you're in a flood zone or so we actually are long some of these catastrophe bonds because, man, the yields are ridiculous. We're getting like 21% yield on some of these catastrophe bonds.
Okay.
So that has nothing to do with the government. That has to do with sort of the weather and global warming or whatever you want to call it. But man, I could not imagine like being an upper middle class person moving down to Tallahassee to take a great job with your taxes cut about 40%, leaving New York or California, and then getting your first homeowner's insurance bill and going, what? Did somebody like put a mortgage on my house? And what's going on?
Right. You don't have a 18-year-old driver on your car insurance policy right now, do you, Toby?
I'm sorry?
You don't have an 18-year-old driver, a male, on your insurance.
No, I do not.
That increases a lot more than the percentage, 20 or 30% that you might get annually.
Well, I can tell you for the absolute memory, my dad died when he was 19, right? When we were 19, right? But at 16.1, my brother gets a speeding ticket, my twin brother, and but the month later we get the farmer's insurance bill. And let's just, again, this is 1970, but his bill got doubled because a 16-year-old got a speeding ticket.
Yep.
The guy fought World War II. He was PT Boat 109 and 108. He lost, tough as nails. He lost it. He just ripped everybody because, man, the auto insurance, when you have kids, get used to it, big boy.
Oh yeah, no doubt about that. Well, Jeff, unless the Toby's limousine driver is 18, I don't think he has to worry about that right now.
That's
so
plus,
absolutely.
Plus she is hot. Okay, she is hot.
Let's leave it right there on this block, guys, because coming up after the break, I should say, tongue twisted today. We're going to ask Jeff what happens if the January barometer does not come through for us, and we want to know what that means for the markets and the risks ahead. So joining us today is Jeffrey Hirsch. He is the editor-in-chief of the Stock Traders Almanac, and we'll be right back with Buy, Hold, Sell after the break.
Yeah, and I want to know the best sectors, Hirsch. The top 3, that's what I want to know.
Buy, Hold, Sell, brought to you by CrossCheck Management.
We give game day a whole new meaning. The Kentucky Derby, Woodford Reserve Bourbon is a spectacle for the senses.
Welcome back to Buy, Hold, Sell. Well, with us today, we have Jeffrey Hirsch, who is the editor-in-chief of the Stock Traders Almanac. As everybody knows that watches Buy, Hold, Sell, you would know that Jeff Hirsch actually caught it from January to December of last year. He even had a great record in 2022, but we all want to know what he's doing now.
Okay, that's history. That's history for crying out loud. How many times can you, freaking polish his head and pat him on the back?
It's part of my contract.
It's important for the audience to know that we only bring on the A-listers, the tier 1 guests that actually accurately predict what's happening in the markets. So, Jeff, let's start talking sectors right now. Tell us what the Almanac is telling us for the favorite sectors of 24.
Well, we don't do favorite sectors for the year. We have a seasonal sector trades.
Okay.
So we get into the sectors. We do our annual fall buying spree right around middle October, when we just ahead of the best months, and we get into a whole host of sectors: healthcare, tech, telecom, transport, semiconductors, consumer discretionary, etc. We are selling, and this was as of last week, telecom and semiconductors, their sort of seasonal run ends in January. It was a big move there. Good sell for us. Coming in to the portfolio is copper and energy stocks, not the commodity. So the XLE, which we got into at about 81 and a quarter. Global copper miners, the COPEX was 34.50 buy limit price, buy price. We didn't get the CPER, the copper, the United States copper, the underlying commodity sector. And what you see is that in December, the energy stocks tend to bottom. They kind of, give us a nice opportunity here mid-December. And copper miners do as well. It's kind of a lull in the, construction building season where all the copper is used. It seems to be a pretty consistent seasonal low. And that's, sort of the overall sector look that we have right now. Biotech
but you don't
as
figure,
well.
Jeff, you don't figure in China's GDP or the building in China, since they're the largest buyer of copper in the world?
I believe China has the same winter we do. And I think that that's all part of the lull, but no, not that macro picture there. It's a seasonal sector rotation strategy. We will, look at some of the, and that's a fantastic point. But China's been in a bit of a lull, economically. I'm not sure that push is coming into it right now. I don't know, you probably have a better read on that. But we do look at some of the influences and, like with oil, I don't see demand for energy, for oil and gas energy lessening at any time soon. So it's kind of got almost like a put underneath it. In general, what was the news with Hertz yesterday or the day before, where they got rid of 20,000 EVs because of, and I've been hearing a lot about the weight of these vehicles and how it wears on the tires. Yes, there's less moving parts and less stuff going on, but they're just heavy and it hurts the roads and the tires. So there's, some fallback in the, alternative energy vehicle stuff. And I think that's good for energy and oil and gas. And natural gas was down in the dumps for quite a long time. And it's finally come out of its slump. It was up like, what, 50% last quarter?
Well,
it's been cold too.
Yeah, natural gas in the United States is now, we're the largest LNG exporter, we're the largest LPG exporter, we're the largest oil exporter. It is interesting, the seasonality, as you say, on energy, and we're not running too many boilers that are putting out electricity anymore. We're certainly running a lot of natural gas utility companies. But here's the one for you. Again, going back to uranium. Uranium doesn't really have a season, but it does have this situation where, since most enriched uranium comes out of either Russia or Kazakhstan, A, and then B, we own a company, LEU is the ticker symbol, is Sonova. They're the only company in North America that actually buys uranium and makes uranium.
There's uranium in North America. They're just not allowed to get it.
But they're not allowed to get it. And then we only have one plant that's certified to upgrade it to usable uranium, right?
Just off on a tangent for a second, I think uranium and nuclear power is the solution to all of our woes. Everyone's just afraid of it.
Right. Well, the ghost of Hiroshima and other, parts have, I believe, dissipated. I did watch the entire movie for 3 hours, by the way. I saw it for 3 hours, and it was great. Oppenheimer, but
yes,
there is no choice. If you live in a politically liberal state, you're not going to get nuclear power, which is always just incredibly silly. Since California is the largest state, and they've only built 2 nuclear power plants in 40 years.
We may not be allowed to get natural gas in New York at some point.
Right. Yeah. Talk to Toby.
I got a line going out to my grill. How am I gonna grill my chickens and steaks?
Propane, my brother.
It's going to be tough for you. Yeah, times are tough.
All right, but Jeff, I want to hear about the no free lunch stock. That's
Well,
the one.
that's what I was going to
No, it
segue
is the
into
free
because
lunch.
you're talking about chicken and steaks. Let's talk about the free lunch trade.
Getting hungry.
That's a buy, hold, sell exclusive.
There you go.
I wish it was. We already put it out, but I'll explain it to you. It's called Wall Street's only free. Oh, you can't see it with my virtual.
Yeah, we can't see it.
I'll
We'll
stop.
put it in the description. We'll make
The
it.
only
don't
free
worry.
lunch on Wall Street, something that Yale, my late father came up with. There's the saying that, there's no free lunch on Wall Street. Well, there is, there can be one. Again, it's a little catchy title. And what historically stocks are making new 52-week lows in mid-December, outperform the composite, like the New York Stock Exchange through February 15th. That was the old, school pattern. Plays on the January effect, not the January barometer, but the January effect of small caps outperforming the large caps in January.
Jeff, we speak stock traders almanac. Okay, we have your whole shizzle down.
I appreciate that. So we've shifted the day that we pick these new 52-week lows to the triple witching day before Christmas. Got some good action on the day.
Can you tell the audience what the triple witching day is so they don't think you're like doing, cutting
Triple
chickens' heads off
witching
and
is the
stuff?
day that
Stuff.
options expire, stock options, index options, and index futures, the quarterly index futures. I do not subscribe to quad witching, which includes single stock futures and single ETF futures. Last I checked, they don't amount to a hill of beans or whatever. They have no impact on the market. But I know that zero, day to expiration and all the weekly options are having an impact on put call ratios and all that kind of thing. But there still
And the
seems to
VIX.
be the VIX, very true. And there still seems to be some action around triple witching, especially in December. We have a whole page on triple witching in the book. September and June are weaker, March and December are stronger. But anyway, there's a lot of action, a lot of volume on that day in December. It also gives us the weekend to sift through all these lows. We weed out anything that's not a regular common stock, no preferreds, no new issues, no splits, nothing that's not a regular common stock that hasn't been trading for a year. And we pick the ones that are down the most. We get rid of very thinly traded stocks, any fly-by-night, China internet stocks, or things that aren't over $1, because a lot of platforms, a lot of people can't trade stocks under $1 on their certain brokerage platforms. And we want some volume and some market cap, like 100 million and 50,000 shares traded, whatever. And we put out that list, and very often I will buy them. Buy the whole basket. Don't pick one. Don't try to be smart. We pick from the NASDAQ, the American Stock Exchange, what's left there, and the New York. And the thing is, it's for nimble traders. These things can be real dogs, but they tend to pop. And if you get any big gains, you just take the profits. You're not holding on to these things. It's not like, oh, I found a great undervalued stock. It's just something that's beaten down, sold for tax loss selling purposes, and top other stuff. And you just try to get that, ride that bounce. So there was
What
one
was
of
the
them.
water stock that you were talking about?
Yeah. So it's what is it? SCWO was the ticker. 37 water. I mean, I don't even know what they do. Something to do with water purification or something maybe, but it was trading at 104, 105 was the low. I bought it. And we put a 3 plus or minus 3% around the closing price of that day. So if it trades below the price on closing price on Friday or above it, just pass.
Yeah.
And then a 15% trailing stop.
Right.
So a few days ago, I'm looking at it. No, it might even been before the new year. I'm looking at it lunchtime, and this thing's up 24.84, 25% for the day. It's up 90% of the trade. I asked my partner, I said, well, Chris, should I sell it? He's like, what do you mean? Yeah, I mean,
Yes.
So boom, I sold it for like $1.99 or something. Some of them are this is why I also think that the small cap run is a little over. A lot of these free lunch stocks are starting to come back off that pop. I wish I had sold all of them there, but it's
well, I love the name. There is no free lunch. God bless your dad.
It's the only free lunch.
The
on Wall
only.
Street.
Only free lunch. Jeff, Toby wants to know if there's going to be an early bird trade. Do you have anything like that in the works?
What does that mean? Stuff
He's
in
referring to
January?
the Jerry Seinfeld show, going to the early bird.
Oh, the early bird special.
Yeah.
It's not a bad name, Toby.
Yeah, there you
We
go.
can come up with something.
Jeff,
All right,
Jeff,
I like that.
Jeff, right now, Todd has actually had an original idea. I just heard it right now.
I'm buying the URL right now. So listen,
Exactly.
so Jeff, before we close out the show, we have to talk about crypto. We have to talk about the SEC approving the spot Bitcoin ETFs. What's your opinion on this? Do you think that this is a good idea or a bad idea for investors?
Seems like a sell on the news type of moment now. I own a position in GBTC. I sold half on a double. We discussed my seasonal Bitcoin seasonality study that I put out last September, right around that seasonal low. I
Yeah.
picked up a few shares, small position, early October. I think it was the 5th at about 20.39. I sold half the other day, just ahead of it. I think the day before the news came out, I was like, yeah, this could sell off. Then I kicked myself and I went up a little higher, and now it's back below where I sold it at. So I may be closing out the other half of that position. It looks kind of toppy. The news doesn't seem to be great, and GBTC has the largest fee of all of them. This world, you know, people just, they want everything cheap on sale. Nobody wants to pay a fee, even though, you know, there's a cost of doing business. So,
Well, Todd, Todd, I will say this. What was intriguing to me, first off, that quote unquote, tweet that was, or that was, they didn't get hacked. That was totally freaking somebody set up. I mean, there's no way, but
no, it was an
then I
intern.
knew that then it was going to be positive news, and everybody had said it was going to be positive news. So maybe someone internally just said, "All right, just screw it. I'm going to send this out." But what's intriguing to me is we had been long Coinbase, you know, when it just started to go vertical in November. And I kept, you know, we use trailing stops, automatic trailing stops. So as the stock goes up, the sell stop goes up. And then we also did it with our friends over at YieldMax on their high yielding underlying the.
How much room did you give that on the trailing stop?
I gave it up 15%, and then I tighten it. You know, if it doubles, I get doubled. So then I tighten it to 8% or 7.5%, depending on. But it had never dawned on me so that the miners have all sold off big time. I mean, Mara's down 25%. You know, Riot, all the guys. My favorite one's INEX, which uses nuclear power to mine, right? So, but it appeared that everybody used those miners as the proxy for Bitcoin because they couldn't get a Bitcoin ETF. Then they sold the miners to buy the ETFs. Those ETFs traded $30 billion worth of Bitcoin. If you take all of the various ones that opened up for trading, I was staggered.
On another thought, I wonder if this whole approval and putting it under the regulatory guise of a market regulator sort of undermines the entire decentralized finance aspect of the whole thing. I mean, first of all, it's I mean, what's the intrinsic value of it? The ETF's buying it. Now that it's being regulated, how does this whole, you know, anonymous secret world continue to stay that way when it's under the scrutiny of the Securities Exchange Commission?
Jeff, I mean, I think you made a great point. We are long Ethereum, and Ethereum's done very well for us.
Yeah,
Simply because Ethereum actually has a use case. It is the underlying blockchain behind, you know, every crypto coin, every crypto token, every crypto piece, and also for financial services. In Brazil, Ethereum is the #1 technology for changing money, particularly in Argentina, which we're going through this year, where the inflation rate was only 181% in the last 3 months. Yikes.
I'm looking at, I have a whole basket of them I'm tracking. All the new ETFs, Bitcoin, Ethereum's also down 5% today. MicroStrategy is down 9+.
Yeah.
Mara's down 15+. Everything else is down about 5-6% or so. It's come off the low today, though. I'm glad I didn't sell it to the top.
Well, I know. I'm looking at our Ethereum. We're still up a fair amount, but But the logic, the only logic that makes sense to me is that the people said, hey, I had a great run in minors, by the way, but they took, a fair amount of people took profits like day 1, day 2, including us. But then they sort of rolled up again as we're getting near the 12th, and everybody knew the 12th was the date or it had to be done before the 12th. And then they just crashed in the last 48 hours. Yeah. I don't know what that means other than the fact that people are taking profits or that they're switching in to go into the Bitcoin, the real stuff, not the proxy. But that surprised the heck out of me.
Well,
I wish
it's
I was
all down
sure
5% today. The miners down more. It seems like a technical top.
Yeah. Well, obviously people had a lot of sell stops on those things because they'd gone up so much. Mm-hmm. But just for the people at home, if you put a sell stop underneath an ETF or a stock or an option for that matter, and you make it a market sell stop, then if the stock's going down, then you're going to put that sell order in at market, which means that you're going to take another 5 or 6% haircut just because there's too much there. Jeffrey?
On stops, I only use them as a mental stop. I do not put stops in the market for market makers to hit. So like on our stock trading, we use it on a closing basis. So if the stock closes below our stop level, we'll go in the next day and exit the stock. And then I will personally go in and like split the bid and ask with a limit order.
Yeah.
And track it. And I become like a little bit of a day trader for a few moments or whenever, and I'll put it in good to cancel, and then I'll check on it later. And it tends to work. It's hands-on. It's not science. It's not trigger. It's a little art, but that's how what works.
Well, Jeff, that's a great point, because I guarantee you that Mara or Riot or Humvee or whatever the heck is a Hive, for them to drop 15-20% in a day, that is a cavalcade, a cascade of market sell orders that, as you know, and maybe people at home always don't know, there's someone in the middle called a market maker. There's a reason why Ken Griffin makes $71 billion a year making markets in these things. So they don't care. They're already short and long, and all they're doing is take a little piece all the way. But when you have those market orders, the market maker takes advantage of it. That's what they're trained to do. I have good friends who are market makers, and when they see on their screen all these market sell,
they're gonna hit them.
Bam! They just hit them, and it just exacerbates the downward movement. So because the other market makers are looking and saying, "Hey, I'm not getting near that thing either," right? So it's somewhat a self-fulfilling feedback loop, shall we say?
Well, next up should be the Ethereum ETF, because
Ethereum.
Ethereum. You can buy
Ethereum. What planet do you live on, Todd?
He's from upstate New York.
God. But you can buy the futures contracts on that one. And so you can only suspect that you will have an ETF out there. But after that, probably won't find other crypto.
Yeah, you do have EETH. EETH is the Ethereum. It's from ProShares.
Actually, that's more of a Baltimore-ese accent, right?
Yes. And speaking of, go Ravens on that note, no doubt about it.
Been
so
fun
listen,
to
we're
watch.
going to leave it there. Jeff, how can everybody find you and the Stock Traders Almanac? Because I know you still have some copies out there that could be sold to investors.
Not a whole lot. We're running out. So we're saving them for people who take out the subscription service. You can Google Stock Traders Almanac, but you should go to my website, stocktradersalmanac.com, with the S, Stock Traders Almanac. And you can, either take out a free trial or see what our deal is. If you click on Get STA, you'll see the best deal out there with a discount code.
Todd, I rush to the mailbox every day looking for my Stock Traders Almanac coming in, and I've been a little disappointed.
I am remiss in my duties. Do I have your address?
What do they say? What do they say in Queens? I'm just busting balls. Okay.
Email me your address.
Love it.
Don't give it out right now. The audience will be sending all kinds of things. So, but
and not
awesome.
nice.
He knows it. I'm not giving it out.
So, very good.
All right,
coming
Todd.
up next. coming up next week on Buy, Hold, Sell, we have a very special show coming up. Toby is actually going to be hosting the show with JC Peretz and Matt Toddy. He's a former stuntman turned trader. So that's going to be just an action-packed show, and we can't wait to have that. We also have Gina Martin Adams coming on, Mitch Rochelle, Barbara Duran. We even have ESPN's Chris Cotter who's going to be joining us.
Oh
so much
God.
to look forward to. So it's going to be wonderful. But on behalf, well, thank you, Jeff, once more for joining us today on Buy, Hold, Sell. We can't wait to have you back again.
Me too.
Definitely to talk about that.
All right, love you, brother.
Thanks, Jeff.
All right, you guys take care, and everyone have a great weekend. We'll catch you next time on Buy, Hold, Sell. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.